Hello everyone, Akash here. If you're personally thinking about buying a car and your credit is not good, bad credit mean like you have a credit score probably below 600, most likely, right? And you really need a car. So what are your options right now? So you're thinking about how much interest you're gonna pay if you get a car, because like the interest is a big difference in a car payment every month. If you look at it, maybe sometime if you get a bad credit, they might charge you 15%, 20% interest. Yeah, that might surprise you. But if you have a bad credit, a lot of time you see a car dealer, they're selling a car, says bad credit, no problem. If you have a job, you drive, but they don't tell you that when they give you the financing and how much interest they're gonna charge you. They don't tell you that. You get a bad credit, somehow they'll figure out. There's some companies out there, they're willing to take the risk and give you the financing money, but they charge huge amount of interest. So, but right now you're in a situation that you really need a car. So for personal, my experience, I would tell you that how much money do you have cash saving right now? Okay. If you're kind of person that, let's say you have $5,000 saved up, right? But you want a car, you're looking at a car in the app and it's like $15,000 car you're looking at right now that you really like, that you think, that's a decent car that I would try to get. So it's a $15,000 car. And if your credit is below 600, and then definitely they will charge you at least minimum. If you get lucky, if your credit is below 600 in a US market, I'm talking about, at least more than 10% interest they're gonna charge you. Could be 15%. So think about it. That $15,000 car in 5 years, you might pay $10,000 interest in 5 years. If you're paying 15% interest, think about it. So that's another $10,000 basically putting in the toilet and you flushing it out. That's what it is. So, right now you're probably in a situation that you have a lot of credit card bills that you're just making minimum payments and your balance is too high on your card. That's why that's why your credit score is so low. So, the $5,000 or $3,000, whatever the saving you have, if you put towards your credit card bills and not using those credit cards, 1 month, 2 months, you're gonna see your credit score gonna bump up. The reason I'm saying that even that $5,000 or $3,000 you have, you putting, paying off your credit card debt, and then your credit score gonna go up. So same car, you're looking at $15,000. Maybe just wait for a month or two and make your credit a little bit better. Maybe you have a 600 or below right now. Maybe bring it up to maybe 650, 660. If you could go over 661, most likely you're gonna get a like less than 10%, like 7%, you could get it. So that would be huge difference. You're gonna see your monthly payment. If you have a poor credit score right now and you just go buy a car, you might see a $400 per month you're paying for $15,000 car, or $500 per month you're paying for $15,000 car. But you're gonna see the principal amount is gonna be so low. Maybe $200 going towards the principal of the car, but another $200 going towards the interest. So that's a huge interest you're paying for that. So if you have that little bit extra save up, just pay off your credit card bill. This way your credit score gonna go bump up a little, and then you're gonna get better deal on the interest. So all I'm saying this way, in 5 years, you're not gonna look back like 2 years later to say, man, I made a really bad deal. Doing that. Another option you have, if you don't have the money right now, to just pay towards your credit card, okay? So you just go, if you really need a car, even the $15,000, they're gonna give you really high interest and whatever, they're gonna charge you at least 10 to 15%, okay? But you really need the car, so you just get it. You get the car, then try to improve your credit. Maybe within few months, try to improve your credit. So this way you improve your credit, then you refinance the same car. So you're not gonna pay those hefty interest. You got my point? So you just get the car, just 2-3 months, you check out your credit score and see your credit score going up and up. Then you say, well, you know what? You just call your bank, local bank, the bank you have checking account, saving account. You could just call them up and listen, I have a car and I have a car loan. If I get a loan from you guys, refinance it with you guys, how much you guys gonna charge? Again, they'll check your credit score and now they're gonna see your credit score is good. So then they'll give you much lower interest. So this way you're gonna avoid for 5 years paying the a huge amount of interest, and that just then at that point they switch it to your bank, or somebody else giving you better deal on low interest. Okay, so like it's not fun to be in a situation having bad credit, walking into a dealer and paying like 10-15% interest on a car. It's not fun thing to do it, but again, if you really need the car, you do it. But all I'm gonna say, try to get the best deal. Even you go to the dealer, make sure, try to negotiate the price, or negotiate the, like the dealer fees, or if they're trying to sell you warranty or gap insurance, try not to get all those things, because right now your interest is gonna be so high paying for the car every month. Plus, if you get the warranty, if you get the gap insurance, all those things, other things, they're gonna dealer fees and everything, they're gonna load it on you. That's gonna be huge amount of money for paying for a used car. So many different videos you'll find in my channel which could help you, make the right choice, what kind of car to buy if you're in a tight budget and everything. So, and just follow that. Even you get it, the high interest car, just refinance it. As soon as you fix your credit, just refinance it. So hope this video was helpful to you. If this video was helpful to you, consider subscribe to my channel. Thank you so much.